Welcome to another YouTube video on the Williams FX channel. Today we're going to talk about catching the trend. Catching the trend. Now, it's always good to catch a trend and take the best use of it, because it's better to have one good trade with 500 pips than having 200 trades with 20 pips, 30 pips here and there, because you would lose some, you would win some, and you could come out with either a loss, break even, or little profit if you are not really strong in the market. So basically, I want to show you how you can catch trades on a trend and keep working with it. So I did a back timing on this chart on GBP/AUD, and I analyze more on my daily and my H4. So I'm going to be using the daily on this, and this is August. This is sometime in August 22nd. I'm just going to analyze with the August 22nd, and then we'll move from there. We're going to see how the market respected this trend, or how the market moved from there. So we are seeing a trend right here coming from the top side, 6th of May, which was possibly a Monday, obviously. Which was a Monday, obviously. And then we saw a push to the downside. The market did this. The market did this. The market did this. And as you can see, the market respected the lower highs, lower lows, lower highs, lower lows, lower lows, lower highs, lower lows. Now, this is a major support zone here, a major support zone that the market is trying to respect. And how did we find that out? It's easy. If we look back in time to last year, we'll see that the market respected this area as resistance here, support here, a support here, a support here, a support here, broke down, resistance, broke into it again, and respected it as a support. So that's an area of value, okay? That is an area of value for the market. So we are expecting to see the market push up from here after we see a price action formation. So now we don't know what the market is going to do next, but I'm expecting the market to go up. I want to see what the next candle is going to be, okay? Because it has broken into my zone of influence, and formed a bearish candle. Now I want to see the next candle I'll form after there was a bullish candle forming with a lot of bullish momentum before the bearish candle. Let us see what the next candle formed. Boom. And then the next candle formed two bullish candles, breaking over my zone here, breaking over this this support zone here, this resistance zone. Now it broke into it, and we might want to put in our buy stop. Also put in our buy stop, but hold on, you'll be waiting for a retest of this zone buy stop. So let us see what happened after that. Boom, boom, like a double tweezer, like a tweezer top. Okay, now if you had put in your buy stop, it would have taken you in and taken you out. I actually wouldn't have put in a trade, because I would have been waiting for a retest either of this resistance zone after the breakout, or this support zone. Let us wait for our retest. As we can see, the market is trying to retest. Boom, we have our retest. We have our retest. So our next candle now is going to show us when to enter this trade. This is telling us that this zone is well respected and cannot be broken. Okay, only if something in the market, maybe a fundamental news or something really ridiculous. So let us see what the next candle will be. Good, a bullish candle. I'm going to take my trade from here. I'm going to take my trade right from this spot. And if it takes me out, it takes me out. Then I look for another position. I'm going to play my trade to take me in after this minor support zone here, and I'll put my somewhere here. I know it's a very wrong move. Some people say, oh, a very wrong move. But yes, I'm going to take it like that. Or I'll put my stop loss right here. Right here. Yeah, about 100 pips. Then I'll put my take profit. I'll put my take profit at 300 pips. Now, this is not my ultimate. This is me just trying to measure up what I'm doing. Now, let us see if it will actually take me in. It took me in and took me out again. Loss, out of the trade. We move. I'm trying to show you guys that you can actually enter a trade and lose it. That is why I took that trade. Now we have another one again, another confirmation. Now this is the confirmation. This is the confirmation that should actually take you into the trade. This is the confirmation that should actually do what? Take you into the trade. This very confirmation right here should take you into the trade. Now we have this. We have right below the wick of the last candle, and then let's write it a little bit up to this point. Okay, so let's go, guys. Let's see how it will take us in now. Now let us assume we've lost that trade for real. Now we're expecting it to push up here. Okay, so this is it. A buy stop order and we move. There we go. There we go. There we go. There we go. Take profit number one. Now, this is the point. The moment the trade took you to your take profit, the moment the trade got to, I was about to take you out of your take you towards your take profit. This is over 50% of the trade. Move your stop loss to entry and then close a little bit. Move your stop loss to entry and then close a little bit of your trade. Okay, move your stop loss to entry, close a little bit of your trade, and watch the market do what it wants to do. Now, immediately at this point, I would have taken out and seen what the next candle would have done, and voila, we had the next candle do this. Now, at this point, I would have put my stop loss, taking my stop loss up to this point. Now, locking in some profit for me, because the market has done this, and then I'll wait for what the market is going to do. See what the market did after this. This is the new uptrend trying to form. Now we can see that there's a lot of bullish momentum forming in the market. Now we are waiting for a retracement to happen to know what we are going to do in the market. Now let us wait for the retracement. Let's see what the retracement is going to do. Okay, this is actually wrong. This is not what I would have done. Made a little mistake here. This is it. Sorry. I would have had, my entry was here. Yeah, my entry was somewhere here. My entry was here. My stop loss would have been at entry. I would have taken out some profits, put my stop loss at entry. Yeah, and I would have been waiting for a retracement. Yeah, this is it. Okay, so we are waiting for a retracement. Now, our stop loss is at entry, right? Don't forget our stop loss at entry. And then we saw this retracement. We'll use our Fibonacci to measure the retracement. We'll use our Fibonacci to test our retracement. And then what do we have? Our Fibonacci has gotten to our 50 zone, and then want to measure it up and see what it will do. Now, the next candle will tell us whether we are still going to have that uptrend or we're going to downtrend, or it's coming back to the support zone. And right after that, we got two bullish candles that showed us that the price was actually going up. Immediately after joining our Fibonacci, right around our 50% to 61.8% gold zone of the Fibonacci zone, we saw what happened there on those levels. The market pushed back to the upside. Now, before the market pushed back to the upside, immediately this candle formed, which took a whole day to form, so it is not far from what you are actually seeing in the market. Immediately this candle took a whole day to form, we would have put in a new entry. This entry would have still been valid. You would have put in a new entry at the 38.2. Put your stop loss at in between 61.8 and the 70.0, where my stop loss would normally be. And then I would ride it up to this point. Now, let's see what happens in the market. Now, I'm putting a whole lot on the ground because I'm risking 196 pips to take 525 pips. Some other people would not risk up to that. They'll risk only like 150 pips. You know? Now, this is the point. This is the point right here. Now, let's see what happens in the market after this. Boom. As you can see, taking me out. in profit. Oh, new profit right here. Sorry, the stop loss was in between 61 and 78. It would have been here on the support zone here, and as you can see, it didn't take me out. It didn't take me out, and would have ridden it up to this point and taken a new profit. As it took us to this point, take stop loss to entry, close some profit. We have 1 here, we have 2 here, and we'll wait for the new retracement to happen. So while the retracement is happening, there'll be a retracement or not. Now let's take out this Fibonacci from here. Let's take out this one from here. That trade is still there. It's still running. So this is a new trade we added on to the old trade, and then we draw a retracement to a Fibonacci to retracement. So we are expecting something like a retracement to this point, which might not happen. Mind you, we still have 2 trades running on the background. So let us see what happens. Your trade is still running. Boom. See this. We have our retracement to our 50 zone and then a bullish candle. And then a bullish candle. While the other trades are still running, we have a new position on our 30 here, like I showed. And if it takes us out, it takes us out. And then ride it to the top, and then we'll put this one in between the 60 and the 70.8. So let's see how it respects our zone, like we did in the first one and second one. Mind you, these 2 trades are still running. They are still running. Put in a new zone, add in a new one, and here we go. 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 It needs to break the 0 zone. So break out of the 0 zone. Yes, that's broken out of the 0 zone. As it broke out of the 0 zone, we are over 50% of our trade movement. Move this stop loss to entry, lock some profits, and allow it to ride to the top. Like as soon as it gets to our TP, you know what we do. As soon as it gets to our TP, we close more than half of the trade and let the rest ride. The second one closed as it thought our TP would more than half of the trade and let the rest ride. We have locked in profits 2 times and we are letting it ride. This is the 3rd one now that we have moved to entry, closed half of the profit, and we want to see what it will do to our TP zone. So it does this. Let us see what it will do if we get to our TP, or it will take us out. Mind you, we have locked some profit. Now see this. See this. Ooh. What did you see? Smash the TP there. As soon as it smashed the TP, close more than half of the trade. Now we are closing like 80% of the trade, and then ride with the wave of the market. We'll let the rest ride with the wave of the market. So at this point, we have 3 trades running now. This one, and this one. As soon as we got this retracement, we measured it up and we rolled it up. We got second retracement, we rolled it up, and now something like a retracement happened here again, but it was still within our zone for the former trade, for the old trade. So 3 trades are running. So let us see what goes on in the market. Okay, we've closed half of that already. So I think it took us out at entry here, but no problem. We've closed a lot of profit here already. So that wouldn't have meant anything. That wouldn't have meant anything. So you watch the trend, Now, for me, sorry guys, for me at this point, I would have possibly gotten out of the trade because I'm seeing this bearish momentum. At this point, when I saw this one form and the first bearish candle form, I possibly would have gotten out of the trade, considering that I would have locked over 1,000 pips all through this point. I would have locked over 1,000 pips all through. Okay, so I would have gotten out of the trade. That is how to catch the best out of the trends. Now let us see what the market did after that. You can see, guys. Now I'm seeing. I think there's going to be a downtrend forming from here. Yeah, you can see that the bearish momentum started from here. There was a little bit of push up. The banks actually want to sell this market, but they want to deceive a lot of people. This is the first sign that the banks want to sell this market, after this consolidation right here, after this whole choppy market right here, the whole consolidation, yeah, we got it to push to the upside, a downtrend, a bearish movement, uptrend, and then something is happening here. Let us see, guys. Let us see, guys. Let's wait for a retracement. A retracement is happening, so let's see. It just has happened to take some days, so chill out. The market is not going to run. Okay, it didn't get to our 50 zone, so we won't take that trade. We'll let it go. Okay, see something. On our 50, we have this, and then a new candle is forming. Now, the candles ended on my 38.20% zone, so I don't have any place to put in my trade yet. So I'm not going to take that trade. Or I might just want to risk it and do something like this. Take a short position from the 23 here. Put my sell stop here, my 23 zone. Put my stop loss on 60, whatever, and see what the market will do. Even though I might not take that trade in real life, but let's see what the market will do. It has not taken me in yet. It has not taken me in yet. Boom. You see how I exactly? That is how to take trades. That is exactly how to take trades. Now, I took that to show you guys that you could make a decision and it could be wrong. But where you put your sell stop or your buy stop determines a lot in whether the trade will take you in or not and throw you out in a loss. Okay? Now, I did it from what I'm reading in the market, and I am seeing what the market is doing. I'm seeing that there's going to be a bearish move very soon. Now, let's see what the market did after this. Boom. Oh my God. Can you see that? Can you see that? Now the bearish move. The bearish move is here. Let's wait for a retracement. Wow. What in the name of this? If you're a new trader, you would have blown your account with all of this. A new trader would have blown an account with all of this movement. With all of this movement. Swoosh. Okay, so we have this, and it might be a downtrend. It might be a downtrend. I'm showing you how to follow the trend. It might be a downtrend. Patience, guys. Patience. Is it going to retrace into our zone, or it's going to go down straight up? Okay, it's not retracing into our zone, so it's going down. It's going down. So let's wait for a new retracement, and then we'll measure up. A new retracement. A new retracement. We got it. We got a new retracement. So let's measure that. Taking us to our 50% Fibonacci zone, Fibonacci level, and you might take your trade here on the 38.2. 38.2. Remember where our stop loss will be, and then write it down to some 500 pips. 1:2. 1:2. Oh yes, 1:2. Be careful with your account that's taking us in, and boom, straight up to take profit. Don't forget, as soon as you get to this, taking us to our take profit yet, close out of your trade, take your stop loss to entry, so that when it goes against you, you have some profit to yourself. And then let's see what the market does next. Pushes down to the downside, and wait for another retracement. Wait for another retracement now. This trade is still running. Don't forget, still running. This trade is still running. No TP, nothing. This trade is still running. So let it be. Let it run. You've closed more than half of your trade, more than about 80% of the trade. So let the rest run. You have some profits in your purse already. So let's wait for another retracement. If there's no retracement, we won't take any trade again because the old trade is still running. Nobody's rushing you. The old trade is still running. Is this a retracement? Yes, looks like one. Looks like one. So let's measure it up. The old trade is still running, but let's clear that out of the screen. So we have a retracement from here. Yeah, we have it to this point. So we have our retracement ending at 50. Yes. Do I want to see what the next candle will do, or do we want to enter the trade? I think I would love to enter the trade first and then see what the candle will do afterwards. But I'll enter the trade if I had to be the one, and I'll put my stop loss here, and I'll put my take profit right here. Is it wise? Take profit is 405, stop loss is 182. Let's see what the market will do with this. The whole trade is still running. The whole trade is still running with our stop loss. While the whole trade was running and moving, you are moving your stop loss alongside. As soon as this retracement, you move your stop loss of the first retracement of the first trade to this point. As soon as this second retracement was done, move it to this point, move your stop loss here. For the first trade, we are still trailing the trend. Now, this is the third one. And as soon as it moves down, we'll move our stop loss to this point here. So let's see how it goes. That's not taking us in yet. That's taking us in now. That's taking us in. Taking us in. At this point, move your stop loss to entry. Move the other stop loss coming from the first trade to your entry as well. So you have two trades running. Both of them are at the same stop loss level and both of them in profit. Okay? Now let us see how the trade will react to our zone. Now we are seeing the consolidation in the market. Boom. Hit smash take profit. Now this is a very strong zone from, remember a few months ago when we took that trade, according to the trade, a few months ago when we started here, we realized that the trend was resting on this support zone, very strong support zone. So you don't want to mess with that zone. So at this point, I'm going to stop everything I'm doing because I know that the trend might not move past this. So I will take all my profits now, knowing fully well that I've caught in this market alone within 10 months, I have caught more than 2,000 pips, way more than 2,000 pips. So we'll just see how the market reacts to that zone. As you can see, the market is not breaking the support. So wait for a confirmation to go long. Right now, there's no confirmation, serious confirmation to go long. Test on this zone. More retests. Big rejection here. Another big rejection here. I need a retest of this zone now. Now we are retesting this zone. Are we going long? Are we going long, or is it a retracement of this push to the upside? Left for me, I won't take this trade yet. I will. Let me see. Let us just check it out. But I would have taken this trade though. Okay. It has not got into our 50% Fibonacci level, so I can't take the trade. Boom, no trade. It didn't get our 50% or 61.8% Fibonacci level. Oh, this is it. Breaking off on this point. If I want to take a long position, now this is very risky, but I won't take it. Now I'll tell you why I won't take it. Let me tell you why I won't take it. Hold on, guys. I won't take this trade because we have a consolidation and we need a breakout and retest of this old choppy market here before we actually decide what the market is doing. For now, you cannot take any trade until there's a breakout and retest of this point and breakout to the upside. Because if there's a breakout to the downside, I will still wait for a breakout of this support zone to take a trade actually. So let's see what the market does after this. Still no major breakout. So this is the breakout and the retest here. So now it has broken out for our zone. We expect a retest of this point for a sell. Is this a retest? Can we enter a sell? Now after this retest, people will enter, right? Many people will enter a sell. But me, I won't enter a sell because the candles are showing lots of rejection. Okay, the candles are showing lots of rejection. So I won't enter a sell. Boom. So I've taken everybody out. And as you can see, guys, that is how to trade the trend. Make a lot of money trading the trend, following every retracement. Learn to close half of your trade when you've moved 50% into the market. Learn to close half of your trade. Learn to close some part of your trade. Stop loss to entry, and keep trailing the trend. As the trend moves, keep following it. Moving your stop loss. As soon as there's a retracement, complete retracement done, move your stop loss to the top of that retracement and let the market follow it. Let the market move right down. Okay? And keep following it like that. And you can follow a trend for a whole year. Yes, you can follow a trend for a whole year and make the most of that. So, guys, if you've not subscribed to this channel, kindly subscribe, like this video, share it with your friends to learn more. And like Williams FX, we always say, let's price action. Candlesticks be the judge. See you guys in the next video. Bye.